Hello, everyone. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. Welcome to another edition of the Forex Morning Mastery, your daily dose of financial insight and strategies. My own name is Sheriff Daramola, and for the next 30 minutes thereabout, I'm going to be your host as I take you on a trading journey where we shall be evaluating the financial market using simple and fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action for today's London and New York session. It has been quite an interesting 24 hours across pairs for us all in this community as we keep on monitoring the financial assets on our watch list for this week, which includes the USOILSPOT, the XAUUSD, and of course, the GBPUSD, as we begin to see some interesting things going up right now as a result of some background development in the financial landscape, which we definitely going to be discussing today. And of course, it will help us to strategically position ourselves for today's trading session. So I encourage us all to stay tuned in so that we don't miss out on any of the valuable ideas we will be deliberating on today. And for those of you who are joining us for the first time, you highly welcome on board as I'm very excited to have newcomers in the house. And I know you will be wondering what this is all about. What is it that we really do at the Forex Morning Mastery sessions? Well, first of all, it's important to note that I usually share a couple of videos during the course of the week, which gives us an insight into what my plans are for the next week. And as a result of this, the Forex Morning Mastery was born out of the necessity to do follow-up details on this particular asset I share during the course of the weekend. So during the Forex Morning Mastery, we as technical traders come together every day as a community to engage in follow-ups and reviews of our current positions on these particular assets in preparation for both the London and the New York sessions. Now, this session usually and officially kickstart 9:05 a.m. West African time, 8:05 a.m. UTC, and I recommend that you stay tuned in so you don't miss out on any of the ideas we will be deliberating on today. Now, it's also important to state that my aim, while I do follow up detail to make informed trading decisions independently. Now, the more time you spend with us in this community, the better you get to comprehend our analytical approach and eventually utilize the information gathered here to make your own trading decisions and strategies. So once again, I welcome you all on board and encourage you to actively engage in the comment section. So with that being said here, we shall be diving right into the business. So I see your comment here. Eric Mudavadi, good morning to you. God bless you too, and thank you very much for your compliment. So with that being said here, we will be diving right into the business, and as usual, the first thing we normally do is to keep tabs with the fundamental factors that will be affecting the market sentiment for today's trading session. And of course, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movement. Now, by monitoring the economic calendar, we get to identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, for this week so far, and based on the asset we have been monitoring. We focused our attention on economic features from both the United States and the United Kingdom. And these are mainly high impactful events, unless in case scenarios where we really do not have any high impactful, then we look out for medium impactful events. Now, for today, Thursday, December 21, we are looking forward to the GDP, which is popularly known as GDP. So it's the gross domestic product annualized for quarter 3. Now, this is one key economic indicator coming in from the United States, which of course represents the annualized change in the country's economic performance, representing the total value of all goods and services produced within the borders of the United States. Now, the anticipation of this event can significantly impact market sentiment, as it provides us a comprehensive view of the economic health and growth. Now, a higher than expected GDP growth often strengthens the market confidence, leading to positive price action and potentially influencing central banks' decisions on interest rates. Now, from the data we have here, you will see that the previous quarter was at 5.2%, and we have economists projecting another expansion of 5.2%, which is actually consistent with what really happened in the previous data. So, despite this anyway, it's still looking very rosy and positive for the United States, as in the recent times, the United States economy has been churning out positive data. Yesterday, we witnessed some housing sector data, which of course came in positive, and then the consumer spending also came in positive yesterday from the United States. So we look forward to see what the gross domestic product annualized quarter 3, the actual figure, is going to be. Will it be just as expected, below expectations, or even beyond expectations? Then another thing I would like to do here is to include the medium impactful events, and let's see if there are any other economic features like speeches that may come up today, which could also affect the market sentiment. Now, we have this one coming in the same time the gross domestic product analyzed will be published, and that is the initial jobless claim coming also from the United States. Now, this is another important economic features that gives us an insight into the health situation of the labor market, and of course it measures the number of people filing first-time claims for state unemployment insurances. Now, a larger than expected number will indicate weakness in the US labor sector, hereby reflecting a negative US economy. Now, in that regard, let's look at what the data is saying here and what economists are thinking will be the actual data for today. Now, the previous month, that is for the month of November, the data came in at 202,000, while economists are projecting 215,000, which is a little bit higher than the previous data, which is a sign that there's likely going to be some contraction in the US labor sector. Then another one that is coming up later today that is also of major importance is the core personal consumption expenditure for the quarter 3. And this is released by the Bureau of Economic Analysis, measuring the changes in the value of all goods and services purchased by residents of the United States during the last 1 month. And of course, this data is a proxy of consumer spending and a major driver of the US economy. And generally speaking, a high reading is seen as positive and of course bullish for the US dollar, while a low reading is considered as negative. Now, this data here also gives us an insight into the inflationary pressure in the United States. Now, looking at what we have here, the previous one came in at 2.3%, and we have consensus also projecting the same 2.3%, which of course is a sign that there is not really a significant expectation for today. But however, we still look forward to see what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectation. And of course, as technical traders, we do understand and know that the anticipation of this event usually sends a ripple into the market, which of course will be affecting the market sentiment. And the only way that we can monitor the market sentiments is by understanding the price actions on the chart. Now, with the information we have gathered here, let's dive right into the business and let's look at the chart from a technical standpoint, looking out for structures and patterns that we will be using to position ourselves for the next move today. So with that being said, we will be diving right into the charts, and the first asset we are going to be looking at today, as usual, is going to be the USOILSPOT. And so far this week, we've done very, very well on the USOILSPOT. Remember, we have been buying this particular asset since the beginning of the week after price did break out of our key level that we identified at around the $72.50 level on the higher time frame. Now, let me reiterate here that for those of you who are yet to watch my weekend videos on this asset, I encourage you to watch them, as it will give you a background knowledge of how we were able to identify the most important levels and structures on this chart to guide our decisions for the week. And if in any way you missed out on these videos, you can check in the description box of this current video. We have links that will refer you to these videos. So now back into the chart. So we have been buying since price broke out of the key level at the $72.50 level. We had our first buy at the beginning of the week after price broke out of the structure, and in fact it moved over 200 pips before the bearish momentum came in, which we indeed considered to be a retracement of that impulsive leg. And interestingly, on Tuesday we saw how price action retraced back into the resistant line of that range, which interestingly shares a beautiful confluence with that key level at the $72.50 area. And of course, we did agree that we shall continue to look out for buying opportunities if buy pressures continue to maintain above both the key level and the ascending trend line. And of course, that was exactly what happened as we saw price transition into what looked like something like a reversal pattern, let's say double bottom structure, and we did added more positions at very important levels that we identified here. So we had one level marked out at the $73 area. As you will see here, we added one more position. Then we also added more positions at the breakout of the $73.70 level. So I would buy stop order again above the $74.50 level. We also added another buy position. And of course, we saw a breakout of the $75.30 level, but that position did not do very well at all, as we saw sell pressure come in, taking us out of all the buy positions we had yesterday. And I do hope you moved your stop losses like we usually do in this community. As long as price action moves significantly well in our favor, we move our stop losses to secure our current position. So we were taken out of all the buy positions during the New York session yesterday after the strong sell pressure came in. And I can still remember vividly, I mentioned during our live session on Tuesday or Wednesday, on Wednesday yesterday, I guess, and I said here that there is a chance that we could have price break down the $74.50 level, which could trigger a counter trend opportunity. And of course, I did mention that we need not get anxious about this, as price still remains above the ascending trend line we projected here at the beginning of the week. And as long as price remains above the ascending trend line, we shall feel comfortable in our buy position. And I said if bearish momentum comes in, there is a chance that it could reverse back into the trend line to anticipate another wave of bullish momentum. So I said that if you are a counter trend trader or a scalper, you might want to capitalize on the breakdown of that structure to run the momentum all the way maybe into the ascending trend line or the $73 area. And if you are a counter trend trader, you must have scooped in some some profits, maybe around 70 or 50 pips thereabout, before the buy pressure came in. So at this point, we still have a bullish outlook intact in this particular market. And of course, I did updated us this morning on both my TradingView and Telegram platform as regards to what is really going on behind the scene that has been driving the market sentiment so far. And yesterday, we talked about the anticipation of the EIA crude oil stockpile reports, which is one of the things that will likely be affecting the market sentiment. And of course, the downward pressure we noticed during the New York session yesterday could be attributed to concerns about low demand, sparked by a surprise increase in the U.S. crude oil inventory, which was released later in the evening yesterday. And the U.S. EIA crude oil stock change for last week unexpectedly rose to about 2.909 million barrels per day, in contrast to the anticipated decrease of 2.33 million barrels, and the prior substantial drop of 4.25 million barrels. Now, this unexpected inventory buildup contributes to the bearish sentiment in the crude oil market. And one thing about this, if we technically, let us look at it from a layman understanding, when the stockpile increases, it shows that there is little demand. That was why the stockpile increased. That means there was no demand that could meet up to consume this commodity. So there was a high stock of this commodity. So what this simply means is that there is high supply and low demand. And when there is high supply, there is always this tendency for price to drop because it is surplus in the market. And when that report came out yesterday, we saw how the market reacted negatively to it. Out of fear, a lot of people took out some of their position, and that resulted in this retracement lookalike structure back into this area, while market participants try to digest the implications of this data. Personally, if you would ask me, I actually don't believe in all these figures, as I think the USA is also playing some power tussle with the OPEC Plus member, trying to also manipulate the market in such a way that it wouldn't favor the OPEC Plus members. As you all know, since the beginning of the year, OPEC Plus has been trying to artificially increase the price of oil by cutting oil production throughout the course of the year. So I think it's like a power tussle between the United States and OPEC Plus members at this point in time. Now, additionally, the U.S. Energy Information Administration reported that U.S. crude oil output reached a record 13.3 million barrels per day in the last week, marking an increase from the previous all-time high of 13.2 million barrels per day. So in fact, everything is just coming out to exorbitant for me to actually believe in all this, but it's okay. This is what the market participants are using to guide their decision, and of course this is what we also want to be using to understand why the price action is doing the way it does. Now, amidst this complex market dynamics, oil prices may find support from escalating tensions in the Middle East. As you all know, the Houthis has been attacking oil vessels across the Red Sea, and as a result of this, I was listening to the news yesterday and I heard that oil prices might skyrocket due to the fact that oil vessels now have to take a longer route to get to their destination just to cut out the Red Sea. So they will have to take a longer route, and that is more cost on transportation too as well. So all this for me still gives some hope and light to the US oil spot. Now, in that regard, let's look at things from a technical standpoint. How do we intend to capitalize on the next move? If you would ask me, the current market outlook is still looking very bullish, and in fact, if you look at the current structure here, the ascending trend line we did identify at the beginning of the week still remain very much intact. Now look at the structure here. If when we connected a series of higher lows at the beginning of the week, capturing all the pivot lows since last week Friday, you will see our price action had consistently and uniformly respected this ascending trend line. It's only one time at the beginning of the week that we saw a breakdown of structure, but it was immediately met with an engulfing bullish candle pushing price to the upside. Now, you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall maintain a bullish bias and of course look out for more opportunities to buy. Now, as a result of this, I did have a buy position around the $73.70 area. I had a buy limit here before I went to sleep. Wanted just to risk it and see how things will work out, and fortunately we got a buy position triggered at that point. And of course our $74.50 level still remains very much intact, looking out for more opportunities at the breakout of that structure. And if price action continues to find new highs, breaking out of the highest level for this week at the $75.30 level, we definitely want to be adding more buy positions to our existing trade. So at this point in time, we still maintain a bullish bias on the USOILSPOT, so we continue to buy these assets going into today's trading session. Now, in as much as we are looking out for buying opportunities, we cannot ignore the potentials that sellers can also come into this particular market. And if sellers are going to be coming in, how do we intend to capitalize on that move? Well, if you would ask me, it's quite simple. If you had been part of this community for a while now, you know what we look out for if we are going to be getting ready to sell. Now, since we have an ascending trend line in place, which has been supporting this bullish momentum since the beginning of the week, we will need price action to break down the ascending trend line. Then this will now wake up the idea of considering selling this particular asset. So what I would like to see here for me to even consider the thought of selling this asset is for this ascending trend line to be broken to the downside, which is yet to happen, and then a retest of structure confirming that buyers are finding it difficult to climb back above that structure could welcome selling opportunities in this market. Now, if you're already profitable so far this week, you can easily place a sell stop order below the $73.70 area just to test waters and see if price action will go to the downside from that area. But if you are joining us for the first time, I do encourage that you wait for confirmations too before you jump into any positions here. So these are my views on the USOILSPOT for today, and it's a very simple setup. So the ascending trend line still plays a major role in guiding our trading decisions for today. So you do want to have it marked out on your chart. Then additionally, those levels there will assist us in capitalizing on or maximizing the potential of this bullish move. So if you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next asset on our watch list. And you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, I saw your comment here, Ronald Kalnin. Good morning to you. Compliments of the season. So in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset. Okay, Ronald Kanin says here that, is there a possibility that the oil prices corrects to the 73.70 level price per barrel? Let me read that again. Is there a possibility that the oil price corrects to the 73.70 price level? I'm not sure I understand what you mean there, Kalnin. Please, I would like you to rephrase that statement so that we can all be on the same page here. So if you say retrace back into the 73.70 level, this is the 73.70 zone right here, which I just highlighted with the red highlight option. And in fact, price has already retraced back into the structure, which interestingly shares a beautiful confluence with that ascending trend line. And in fact, we've had some buy pressure here, which transitions into a reversal setup lookalike, and that has incited this bullish momentum we have here. So it has already retraced back into that structure, unless you're actually talking about another level. So please let me know in the comment section if that is what you're talking about. If that is, then price has already retraced back into that structure. Okay, that is it right there. And the only condition, like I said earlier, that will make me want to sell this asset is for price to drop below the $73.70 area. So let me just put an arrow there to emphasize where the sellers will likely come in. So that is it right there. So I hope I made myself clear there. Or you do want to rephrase your statements, Kalnin. So I still look forward to that anyways. But in that regard, I will be moving on to the next asset on our watch list for today. So the next asset on our watch list for today is the GBPUSD, that is the cable market. And in fact, we have quite an interesting situation going on in this market right now. We saw a situation here yesterday where sellers took over this market. In the last 2 days, actually, sellers have taken over the market. And in fact, the momentum of the sellers is not that significant anymore, as we can see how the 1.26300 level has become a strong barrier, negating all attempts by the sellers to break through that particular structure since the beginning of the week, further emphasizing the strength of the buyers around this area. Now, if you remember, at the beginning of the week, we talked about the importance of this impulsive bullish leg, which started last week Wednesday, remember, taking price into the 1.2800 level. And we also talked about the bearish momentum we started noticing since last week Friday, which we later considered to be a retracement of that impulsive leg. And we did use our Fibonacci retracement tool to capture or project where the retracement phase may likely end. And in fact, we were able to identify our golden zone area around between the 50 and the 78.6% of that previous impulse leg. And look at what we had here. We had that demand zone around this area between the 50 and the 78.6%. Now, interestingly, as soon as price action got into that zone between the 50 and the 61.8%, we begin to notice some buy pressure resume around that area, which of course led to our first buy position at the beginning of the week. Remember, so we saw buy pressure resume exactly between the 50 and the 61.8, which of course falls within the potential demand zone we identified at the beginning of the week. Welcomed our first buy positions here. Then we also added one more buy position, had the breakout of the 1.27, and of course at the breakout of the 1.27350 level, which happens to be our key level for the week before the bearish momentum came in to take us out of our sell positions. Now, as it is right now, price is back into that area, the lowest point of the week, which is the 1.26300 area. And since price got into the structure, we have been noticing some buy pressure here. Yesterday we did have the buy position triggered. Of course, I still remember we had the buy position triggered yesterday, but unfortunately that did not do very well at all, as we were taken out of that position in a loss. And right now price continues to trade around the 1.263, and for me, this tells us that sellers are trying as much as possible to push price to the downside. So it's more like a tussle between the buyers and the sellers, and who is going to win actually at this point will take some time to manifest. And at this juncture, we need to exercise patience, mark out our structures, and wait for them to mature before we jump into any positions. And let's quickly talk about why we noticed the bearish momentum. I did say this yesterday, but one thing here is that the pound sterling at this juncture is still facing some challenges due to the subdued inflation in the United Kingdom, while the US dollar on the other hand saw some gains on improved economic data from the United States. Now, the UK consumer price index that came out yesterday, that is that the inflationary data is to about 3.9% from the previous 4.6%, falling short of the expected 4.4% in November. Now, it is important to note that the Fed, there are a lot of speeches between last week, Thursday, and this week, Tuesday. We had speeches from Federal Reserve officials where they were emphasizing that the general public or the market participants should be very cautious in their approach and discourage any premature speculation on policy rate cuts. Remember, in the last 2 weeks, the idea of a policy rate cut by March 2024 has actually driven the market sentiment, where majority have been pulling their funds out from the US dollar just because of the potential rate cut by the beginning of next year. Now, as a result of that, the US dollar has not been attractive to investors. Now, this speeches from the Fed officials is now countering what the Fed chairman said last week as regards preparing to start easing down on the monetary policy tightening measures the Federal Reserve had adopted in the recent years. Now, this also has sent in a kind of limbo into the market, where majority are very, very cautious right now, waiting for economic features to give us insight into what may likely happen as regards the monetary policy. So the interplay between interest rate and central bank sentiment, and of course market expectation, continues to influence this particular market. So at this juncture, market participants are likely, as you will see in the last 12 to 16 hours, we have a very strong consolidation phase around this area, which of course emphasize the level of indecision here. And whenever we have this kind of situation, we do know that market participants are probably awaiting key economic releases for further insight into either the US or the United Kingdom economy. Now, for today, we are looking at the US gross domestic product annualized for Q3. We are looking forward to the Philadelphia manufacturing survey and of course the initial jobless claims. This will also give us an insight into what is really happening in this economy. So in that regard, we want to exercise patience and wait for this probably closer to the time of this event, and then let's see if there are any structures. But pending the time the event comes up, I was able to mark out some levels here that we will be using to guide our decision. So if I zoom right into the structure, you will see now that price appears to finally be gaining some confidence in breaking down the 1.263, but we can't jump into conclusion that this is a breakdown right now, as this candle still has about 8 to 9 minutes to close before we can actually make a statement on this one. So is it going to be a true breakdown or a false breakdown? We don't know yet, but it has a tendency of even going back into a hammer candle. So we need to be very, very careful before jumping into any conclusion here. And personally, if you would ask me, I would say that I will only be selling unless the 1.2600 level is broken to the downside. And why have I said so? Well, if you look at how important the 1.2600 level is, you will see that it also shares a beautiful confluence with the ascending trend line we identified on the higher time frame. Now, for those of you who had not watched my video on the GBPUSD, you need to watch that video, as it will give you a background knowledge of how we got to this point. Now, let me, for the sake of clarity, let's run through the 4 hours time frame quickly to see how important the 1.2600 level is. Now, on the 4 hours time frame here, you will see that price action has been on a strong bullish momentum since the beginning of the month of October, and in fact we have a couple of ascending trend line to buttress this. However, if we zoom into this current structure, you will see the ascending trend. One of the ascending trend lines I was talking about is this one right here, which is still very, very much intact, as you will see how price action had been respecting this trend line. Now, at this point, price is gradually approaching that ascending trend line. So the reason why I have said that I would only wait for the 1.26 to be broken before I can sell is simply because of how the 1.26 also shares a beautiful confluence with that ascending trend line. Now, if I can see a breakdown and retest of both the 1.26 and the ascending trend line today, then this could incite some selling potential, which will give us a minimum of about 100 pips. That's back into the 1.25 area, which happens to be a very, very strong demand zone since the month of November. As you will see here, very, very strong demand zone, which also shares a confluence with the major ascending trend line we spotted on the higher time frame here. Now, if price gets into the structure and we begin to see some buy pressure, we might be in for another wave of bullish momentum, and the breakdown of the structure could incite more selling opportunities. So you can see how crucial the juncture we are right now is, as depending on how price reacts to the 1.26 will determine if I am going to be selling or not. So let's see how the market will play out in the next couple of hours. So ensure you mark out this level. If you have not marked them out, you can easily watch my videos, my weekend videos on the GBPUSD. The links are right in the description box of this current video. Mark this level out accordingly, and let's use it as a yardstick to guide our decision. So at this point, I still remain very bullish. The market structure is still within our potential demand zone unless the 1.26 area is broken to the downside. Now, if I'm going to be buying, I want to be looking out for buying opportunities at the breakout of the psychological level, breakout retest of the 1.265. Then I want to be looking out for more opportunities to buy at the breakout of the 1.266500 level, and then we have the 1.2700 area, and of course the highest point, our key level for this week, at the 1.27350 level. So this is my simple view on the GBPUSD for today. So let's mark out this level and allow our structures to mature before jumping into any positions. So like I said earlier, I still maintain a bullish bias unless price breaks down the 1.26 area, or I see some significant signal before the breakdown happens, which of course I will let you know in the comment section of both my TradingView and Telegram platform. So if you have any questions as regards to this current setup, feel free to let me know in the comment section below. So as usual, I will be taking the next 10 to 15 seconds off to see if there are any questions before we move on to the next assets on our watch list. Okay, you are very much welcome, Ronald. I'm glad you found that helpful. Moving on to the final assets on our watch list. All right, so the final asset on our watch list for today is my favorite asset, which is the XAUUSD, popularly known as the gold spot. And since the beginning of the week, we have maintained a bullish bias on this particular asset. Yesterday, though, we had our buy position from yesterday taken out in a loss, unfortunately, has the market, though the market structure still exhibit the bullish outlook, as gold even attracted some deep buying during the Asian session today, and hereby reversing that significant portion of the previous day's decline, as you will see here. Remember, in the New York session yesterday, for those of us who are part of the XAUUSD live window, we did buy around that area, but unfortunately we were taken out of that position during the Asian session. I think when I woke up this morning, I saw that price action has been taken out of that position, and as a result, price still remains above the ascending trend line, which of course still maintains the idea that we should continue looking out for buying opportunity. Now, at this juncture, market participants appear to be anticipating fresh catalyst before positioning for next directional movement, and as a result, all eyes are on the release of the US core personal consumption expenditure, which we have it's coming up on Friday, as you will see, and which could impact the Federal Reserve's future policy decisions. This in turn is expected to determine the near-term trajectory for the safe haven assets such as the gold. Now, given the current market structure, what are we looking at for today's trading session? Are we going to continue buying this asset, or are there chances that sellers will come in? Well, before we go into the details here, let's run through what really happened at the beginning of the week. And for the sake of those who missed out on our earlier editions, they have the privilege of being on the same page with us. Now, at the beginning of the week, we had the situation where price was initially confined within a range that is between the $2,024.80 level and the $2,016.10 area, to emphasize the level of uncertainty that was happening during that first hours of the week. Now, whenever we have a range like this, you know how we do it. We wait for price action to either break out of the resistance line or the support line for an opportunity to trade. And at no point in time did we see price even come close to the $2,016 area, hereby negating any idea of considering selling this particular asset. But instead, we saw price action break out of the resistance line at the $2,024.80 level multiple times to incite that uptrend move. Now, another thing I would like to call our attention to here is the fact that we saw an uptrend continuation pattern in the form of a pennant or a flag pattern, depending on from which perspective you are looking at this from. So we had this pennant formed already, and of course, whenever we see this kind of pattern, we wait for the resistance line to give us an opportunity to join an uptrend move, which was exactly what happened right here on Tuesday's trading session, which at the same time also broke out of our key level situated at the $2,030 area to trigger a second position. Then we had a third position triggered at 2035, and of course the 2043 before the bearish momentum came in to take us out of all positions. And since then, price action has been confined within a range. As you will see, price appears to be doing some retracement since Tuesday's trading session, but has since found a barrier around the $2,030 area, which at every point in time we saw our sellers have struggled to break through that level, hereby emphasizing the strength of the buyers in this market. Now, as it is right now, it appears that the ascending trend line we marked out at the beginning of the week is still holding this bullish momentum, as you will see here. Now, if this is going to be the case, then we will definitely continue to maintain a lookout to buy. Now, like I told you, I think I mentioned this yesterday or 2 days ago or so, that we might likely be in. We maintain a bullish bias on this particular one. Now, in as much as we maintain a bullish bias here, we cannot ignore the potentials that sellers can come in at any point in time. And remember, we talked about this this pattern, this uptrend continuation pattern we mentioned here, which was broken right there on Tuesday. There are still chances that the market can come back and retest the structure that was broken. Please, let's keep that in mind too as well. So we had the breakout of the resistant line of the pattern. It's still very likely that the market could still come back to retest the structure in anticipation of another wave of bullish momentum. So if that is going to be the case, we'll still have a room for about let's see, about 160 pips thereabout for sellers to take advantage of before the strong bullish momentum will happen. So because of this scenario right now, we look out for selling opportunities only at the breakout of the $2,030 area. That is breakdown of 2030. Then let's see how far that bearish momentum will go. However, if we see interesting or significant setups confirming that sellers are getting stronger, we can actually sell even before the breakdown of the 2030 happens to maximize the potential of that bearish move. Now, if price drops in such a way that it breaks down the ascending trend line and we continue to see selling pressure showing signs that buyers are finding it difficult to climb back above the ascending trend line, then we could start considering selling. That is, if we begin to lower time frame, we could join even before the breakdown of the $2,030 level happens. Now, this of course will take some patience to happen, and trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates. And of course, if it happens during the New York session, I assure you will be part of the XAUUSD live window to witness this real-time monitoring of price action on this asset. So this is what I'm going to be looking at to trade the XAUUSD today. And as you will see, based on our our recent illustration, it's quite clear that our center of focus is within this $5 range, that is between the 2035 and the $2,030 area, where depending on what happens around this area will determine if we are going to either buy or sell this particular asset. Now, if the bullish momentum is maintained above $5 level, we have a 50-cent level. So I would like to mark out this one too here, which is I will show you the reason why I have said so now. $2,038.50 level. So I want to have see price breakout retest the structure for me to add more position to this trade. And why is that? Now look at the structure closely. Following this bearish impulsive move to the downside, it appears price is transitioning into a reversal pattern where the breakout of the structure could be the neckline to incite an uptrend move to the upside. And the fact here is that price still remains above the ascending trend line, which of course makes us feel comfortable in any bullish setup at this juncture in the market. So let's see how the market will play out. But trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple view on the XAUUSD. I hope I made myself very, very clear. And in fact, if you need some insight or further clarifications, feel free to let me know in the comment section. And if you have found this content helpful and useful in making your independent trading decisions for today's trading session, I will really appreciate your support by giving the video a thumbs up. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find this content beneficial to them too. And thank you very much as you do so, guys. So with that being said here, let's see if there are any questions. So I'll just wait for the next 10 to 15 seconds, and if there are no questions, we round off for today's trading session. So I have dropped the link to the XAUUSD live window right in the comment section. It's pinned at the top of the comment. You want to click on that link, click on the notify me button so you can get notified as soon as I come on live. Now, for those who don't know, the XAUUSD live window is a platform born out of popular demand from members of this community, where we come together to monitor real-time price action during the New York session every day and see how we anticipate new trading opportunities and of course manage existing positions. And this usually lasts between 5 to 7 hours since the New York session begins, and this the time frame depends on the volume of trading for that particular day. And I encourage you to be part of that session. So let's monitor price action together during the New York session. So with that being said, here it has been a wonderful day. We were able to attend 3 financial instruments for today, and which of course is what we have been monitoring on the Forex Morning Mastery since the beginning of the week. And this includes the USOILSPOT, the pullback that may happen, so that you can live to trade another day. And for those of you who joined us for the first time today, I do hope you are able to gain 1 or 2 things from what we discussed here today. And in fact, the more time you spend with us in this community, the better you get to understand our analytical approach and eventually be able to use the information you gather in this community to determine and have your own independent trading decisions as well. So on this note, I wish us all the best of luck. I look forward to seeing you same time tomorrow as we come here again to review how well these assets have been doing, and at the same time prepare ourselves for the last trading day of the week. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye-bye.